Hi everyone, it's Athena here again from Berlemon Accountants, and today we're gonna discuss the asset accounts in the balance sheet. Before we begin, if you need any accounting support, feel free to head over to perlemonaccountants.com and we'll get in touch with you. Let's begin. So in the previous video, we had an example of a balance sheet and we went line by line on each account. Let's go on an even deeper dive on each account. So we have here a list of common asset accounts. Asset accounts are divided into two. As you can see here, we have the current assets, and we have non-current assets. So current assets are assets that are readily and easily available or liquid within a period of 1 year or shorter. So current assets are short term. We have here an example under current assets. We have cash by the name itself. Cash items under cash are cash in hand, cash on bank, and cash funds such as petty cash fund, payroll fund, and other immediately highly liquid cash accounts that are unrestricted and are measured at face value. We also have trade and other receivables. And under trade and other receivables, we have accounts receivable. And the allowance for doubtful accounts, the account allowance for doubtful accounts doesn't necessarily appear in the balance sheet, but it is specified in the notes to financial statements. So it's a contra asset account. And what do we mean by a contra asset account? A contra asset account means that it's subtracted from an asset account. So specifically, allowance for doubtful accounts is subtracted from accounts receivable. So here is an example of how it's gonna be presented under the notes to financial statements. We have accounts receivable. Let's say it's a total of 50,000. And we have allowance for doubtful accounts. Of course, this is just a shortcut. But under the notes to financial statement, the whole line account will be written out. And you're gonna subtract the value. And we will have the total net accounts receivable. And this is the item that will show up in the balance sheet, the 45,000. Next, we also have notes receivable. And we also have interest receivable. Another account are the prepaid expenses account. So do not be fooled. This is not an expense account. Prepaid expenses are under the current assets. So by the term itself, prepaid expense means it's all these expenses are already paid and it's recorded under the current assets because it's not yet used. For example, prepaid insurance expense. So insurance, of course, you haven't used insurance yet and you don't know when you're gonna use insurance yet. And prepaid rent, this is rent paid in advance. And you have office supplies. Of course, supplies aren't used yet. For example, bond paper. So it's a future expense but it's not yet used. And lastly, we have one of the most common also current asset, which is inventory. So under inventory, for example, for a manufacturing business, we have raw materials, work in process, and finished goods inventory. Next, of course, we also have our non-current assets. We have property, plant, and equipment, or PPE for short. And under PPE, we have the usual land and building, and this is just like the allowance for doubtful accounts. This is also a contra account. and is subtracted to, to the non-current asset that it's connected to. So for example, we have accumulated depreciation for building, and we also have accumulated depreciation for equipment. And we may also have furniture under our property, plant, and equipment. So those are examples of asset accounts. If you have any question or if you need any accounting support, feel free to head over to pearlemonaccountants.com and we'll get in touch with you. Thanks for watching.